Hey everybody, Tom Floyd back again with the Mortgage Minute. I wanted to speak to you a little bit today about income, verifying income, why it's so difficult, and why we do what we do. So hopefully, if you understand what we're looking for as a mortgage lender, it'll be easier for you to understand why we ask for the documents. Basically, we need a 2-year history on income, which must be documented, must be in writing. So we're going to ask for pay stubs for the last 30 days. We're going to ask for W-2s for the last 2 years. And I make it a practice to ask for the tax returns for the last 2 years. If you are self-employed, have any kind of commission, any kind of variable pay, they're going to want to look at your tax returns. Now, to save you wear and tear, when we ask for tax returns, we don't want page 1 and page 1 and 2. We want the whole thing, every schedule, everything. And I'll tell you why. We're looking for people on commission. A lot of times can write off their mileage. Some of their expenses are not paid by their employer. They're going to review and see if you have any non-reimbursed expenses. Say you make $50,000 and have $4,000 of non-reimbursed expenses. That means you're now making $46,000. So they're going to go through those returns and look for that. Let's say you have a Amway business or Mary Kay business and you wrote off $2,000 of loss on that business. That is also going to come off of your income for qualifying purposes. That throws a lot of people off, but that's the cause of a lot of the grief in loans today, is that some loan professionals don't ask for that tax return. The lender will send off and get a copy of your return direct from the IRS, and you might find some of this stuff out the hard way, which is the closer you get to the closing, the harder it is to have all this information pop up on you. So, let's have your tax returns, income, pay stubs. They're going to look at your pay stub. They're going to see how much of your pay is salary, how much is variable pay. Any variable pay, we're going to have to go back 2 years and average that. So if you have overtime, commission, bonuses, we need a 2-year history and we're going to average it. So again, they'll also go to your employer and ask if this income is going to continue. And I know this all sounds very strict and over the top, but it's the atmosphere in mortgage lending today is that we have to verify everything. Don't want anybody to have a foreclosure or any trouble with their mortgage because some of their income was not stable. And it's, I tell people, when things were wild and crazy, everybody asked for more restrictions, and now we've got them. Now that being said, it's there to protect you, to make sure you don't get into foreclosure with your loan. And I know it's overkill, I know it's over the top, but if you just go ahead and do it in the first place, it saves a lot of wear and tear on everybody. So same as the last video, bring your documentation up front, have it all ready, everything will go smooth. Thanks so much, and talk to you soon.